So for the last 2 weeks, GameStop has been crazy. It went from $2 to $480, and within a week, it went back down to $63. So you can imagine what a roller coaster it has been. And I have been browsing on WallStreetBets, and I see a lot of people posting their losses. Some people lost $700,000. Some people lost half of their earnings. And some people will post that GameStop is still not over yet, and that there's still an opportunity for the stock to rebound. So 96.4% of you haven't subscribed yet. It is free, and you can always change your mind in the future. And this month, I'm looking to help 20 professionals without a financial background to master investing and target 30% a year. So there will be more details at the end of the video. Now, when it comes to investing, there are two main approaches. The first one is value investing, where you make a decision based on facts, based on financials, and based on the business performance of the company. And this is the boring old Warren Buffett way. And that's who I am as well, and I'm a value investor. Now, on the other hand, you get momentum traders. So these are the people that chase after a trend, a fad. They invest into penny stocks, and hopefully that there's this one stock that will make them so rich that they don't need to work anymore, they'll pay for their tuition, and they'll retire. And these kind of stocks are available, and I have met people that invested in one stock and made so much money, which basically allows them to retire within just a couple of months. And when you think about that, it's almost like winning the lottery, right? And that's exactly why it is so enticing. Because when people jump into these momentum stocks, it's like playing a game of hot potato that you expect there's always a bigger fool that will buy your stock at a higher price. And this works very well, and you will make a lot of money until the momentum runs out. And for GameStop, it is a perfect example because it went up like crazy within the last couple of weeks, and it dropped from $480 down to $60 within a single week. So you can imagine the roller coaster that you must have gone through if you're investing at $100, $200, $300, or even $400. And when I'm on WallStreetBets, I see people losing $700K. I see people losing half of their portfolio in a short amount of time. I see people holding positions that are at $300, $400. And this is really the main reason why I don't invest in hype stocks and why I'm a value investor. When the hype runs out and you're looking for a reason to hold on to the position, you will realize that there's no support to your decision making. Your support was other people are jumping in, so I want to jump in and make a quick buck. So what happens if the momentum dies? Then you're stuck by investing at a stock at a high price. And this is really because for GameStop, the business has been dying. The turnaround hasn't really happened yet. The company is not exactly making a lot of money. So you can imagine the stock price should be going down. And if you study fundamental analysis and study their financial statements, that's probably the conclusion that you'll come to. And when you lose such a large amount of money in GameStop, you'll become traumatized and you lose your confidence when it comes to investing because you think that investing doesn't work and you can lose a lot of your money and it feels like gambling to you. These are symptoms that you're making investment decision based on gut feeling and not based on cold hard facts. And this represents an opportunity for you to fundamentally change the way you invest in the market. Because how do you justify yourself to put in another 50K into the market next time just because someone else is also jumping into the stock? You become really scared. And if you only lost a little bit of money for GameStop, then that is great. And you probably learned your lesson the easy way. If you lost a lot of money and you become traumatized and you're unable to make your next investment, there is a lasting impact on your investing journey, your plan to retire early, and also your ability to make a sound decision going forward. Because after making a large loss, one of our emotional response is to try to make it back as soon as possible. And the next thing you would do is to try to take on another risky trade, which may lead to further losses. Now, the third category of people is really people who got lucky and made money from these pump and dump high momentum stocks. Because you have made money from these pump and dump and high momentum stocks, it makes you feel invincible. It makes you feel very powerful because you invested in such a high risk opportunity and you got away with it. And these are the people that I worry the most because the next time when you're about to invest in the market again, what are you going to do? You're going to think to yourself that I can invest in a penny stock and make a ton of money, so why do I need to bother investing in blue chip companies that is safe? Why do I need to bother waiting for a discounted price to get into a stock when I can just participate in these pump and dump? Why do I need to buy a stock like Google and Amazon that is like $1,000? Where I can just buy a $1 stock and watch it go to $10 and 10 times my account. It is this reward that you get from successfully exiting a penny stock which can become the fuse for bigger losses down the line. So if you have incurred losses on GME and you feel really bad about yourself and you can't really sleep, then I think you can exit. Now, of course, if you go to WallStreetBets, they'll tell you to have diamond hands, to hold on to it no matter what. But if you look at the fundamentals, as of right now, GME doesn't really support such a high price, and it will be 5 to 10 years before stock price fully recovers. So if you're traumatized because of the losses and you can't sleep, then it's probably a good idea to exit your position. But if you feel really comfortable and you want to hold on to GME for a long period of time because you think the business will actually turn around and their move to go to e-commerce is great, then perhaps you can hold on to it. But as of right now, the business does not support this level of stock price, so then you will be in danger by holding on to the stock. But this will be an important decision you make. And the next time, when it comes to investing, it's probably a good idea to invest in something safer, something less volatile, so then you have more predictable gains. And here is a good rule of thumb for you. The higher the gain you're aiming for, the more unpredictable it is. So if you want a predictable gain, it wouldn't be something like 1,000% within a couple of weeks. In my experience, if you are looking for around 10% from the market, that is fairly reasonable using stocks. And if you're looking to use a more advanced strategy, then I think 20 to 30% is fairly reasonable. So I'll see you in the next video. So when it comes to investing, my vision for myself is to make 30% a year. And if you want to aim for this target as well, then I have prepared a 9-question quiz for you to become a successful investor. So this is a health check, and if you can answer all 9 questions, then you'll be on your way to be a successful investor. So this includes, what's your stock selection process? What's your risk management process? What's your portfolio management process? Entry, exit, profit multiplying mechanism, and how do you deal with the market crash? And do you have a strategy to reduce your capital gain taxes when you make money? So if you want me to take a look at your investing strategy, then you can email me at eric@5minuteinvesting.com, and I'll give you some comment on your strategy, and we might even hop on a call. So if you want to understand how I address these questions, then you can grab the 4-hour free training on my website. And this is perfect for you if you are a busy, full-time professional without a financial background and you want to learn how to manage your own portfolio and you want to target 30% a year. So you can go to my website, 5minuteinvesting.com/free case study. And after you learn how to invest, these are some of the success stories we have in Investing Accelerator, where Mike made 47% from Outrix in 7 weeks, Florence made 64% from Outrix in 2.5 weeks, and Arian made 59% from Outrix in 1 month. So these are the students within Investing Accelerator. And this month, I'm looking to help an additional 20 professionals without a financial background to master investing and target 30% a year. So if you're interested, go watch the free case study first, and then you can hop on a call to see if you are a good fit. In terms of the giveaway in this video, I'm going to be giving away one of my favorite books, The One Thing, The Surprising Simple Truth Behind Extraordinary Results by Gary Keller. So if you want to get this free book, then just gently tap on the like button and leave a comment below and say you want the book or an interesting comment as well. And after we reach 100 likes, I'll select a winner. So that's it for this video, and I'll see you in the next one.